speaking with ConocoPhillips chairman and CEO Ryan Lance. We'll ask him how Trump's energy plan will affect his industry. And Disney reports earnings later on in the program. We'll break those results as soon as they cross the Bloomberg. And, Joe, we were talking about how stocks have climbed to a record, bonds are tumbling, and not only are bonds tumbling, but the yield curve is steepening.
Right, bonds are really getting smashed, particularly at the long end yesterday and today. Pretty extraordinary. Dow up 240 points again. 2 straight days of mega rallies after this election when so many people thought it was going to bring a financial market turmoil. Shows how nobody knows anything.
Well, there was some turmoil in
like
the span of 4 hours, maybe 2 hours to 4 hours as the results were coming in, and then it turned around very quickly. So we're going to bring in 2 charts here, 2 deep dives that really speak to some of the themes of the day. I'm taking a look at the yield curve and just how much it has steepened. And really the idea here, if you come inside the Bloomberg, is what a difference a Trump victory makes. The blue line is the yield curve today, and the red line is the yield curve on Monday before the election. You can see here that yields are rising across the tenor, across durations. The bottom panel here, and we can make this bigger actually so you can see it, shows the spread between the yield curve today and the yield curve on Monday. And for the 3-year, for instance, let's bring this up here. For the 3-year, you can see that the difference is almost 15 basis points. For the 10-year, it's almost 30 basis points. And for the 30-year, we've now gotten to, what, 32, 34 basis points.
It is pretty remarkable, and it shows, you know, the common theme has been all of the inflation that people are expecting under Trump. I want to go to Alex Steele. She's at the New York Stock Exchange with ConocoPhillips CEO and Chairman Ryan Lance. Alex?
Thank you so much, Joe. Yes, I'm here with Ryan Lance, the CEO of ConocoPhillips. Ryan, such a pleasure to meet you, to have you here. 48 hours ago, we elected a new administration here in the U.S. You already had your plan laid out for 2017. Are you changing it at all with the new administration?
No, we're sticking to the plan that we talked about. So in our company, we have a lot of the longer cycle investments that are rolling off the portfolio. And we talked a lot to the outside world, to our investors, about putting more of that money to work in the unconventional plays here in North America. That was our plan. We're adding rigs. We're going through and following through on that plan. So really no change for us as a result of the changes in the last 48 hours.
If Clinton had become the new president, would you have had to back away from some of those plans?
No, I think we would have stayed with those plans. We were pretty firm in what we were trying to go do, and it was independent of kind of the administration that's going. We really see the opportunity set, the returns, the higher margin, the more flexibility and the discipline we can do with the lower 40 investments that we have.
This is I'm throwing this question at you right now, but who would you want to see as Energy Secretary?
Oh, boy. You know what I'd like to see President-elect Trump surround himself with is very deep and qualified, broad people who really understand the energy business. So, and that's a tough challenge to go do. It's not only about oil and gas. It's about electricity. It's about renewables. It's about nuclear. And it's about how the global system is intertwined. So while I don't really have a name particular in mind, what I'd be looking for is somebody who really understands that, understands a globally intertwined business, and there's lots of elements to the energy business.
Some name that's been floated, of course, has been Harold Hamm, the CEO of Continental. Would you want to see someone like him take that role?
Well, certainly, Harold understands our business. He knows what goes on, and that he'd be a fine candidate as well.
All right. Well, you talked a lot about how you're really focusing on shale. That has been your priority. You have some assets in the Permian, though, about 100 to 110,000 acres.
Right.
Valuations there have really gone crazy. Do you feel like there's a bubble in the Permian?
Well, it's certainly the shiny object in our business right now. Sits in the Permian Basin. I don't know if necessarily a bubble, but I think what industry is finding is the opportunity in that basin is pretty immense. And again, it goes back to the technology and the innovation in our business. We've been able to discover new resources, and the Permian is really the latest in that string of innovation and technology we've done. It started in the Eagle Ford, went to the Bakken, and now it's sitting in the Permian. So, yeah, it's exciting. It's exciting in our business because it's a well-supplied world, and we're making a difference today in terms of the supply that we're bringing into the world markets.
I'm glad you brought up the Bakken and Eagle Ford because you're big in the Bakken and Eagle Ford. Like I said, you have about 100,000 acres in the Permian. Pioneer and Occidental are really kind of doubling down in the Permian right now, but you guys really haven't. Why is that?
Well, we took a more measured pace in our Eagle Ford. We've got one of of the leading positions in the whole leader. We've got the highest value per acre. We've got some of the best acreage in that. We took a slow and more deliberate approach because we wanted to apply the technology. The way I talk about it, we were learning so much through the last couple of years through the learning curve. The value that we added through that trumped the value that you get through acceleration. So our Eagle Ford position, we've got a tremendous amount. We've got 3,500 acres or 3,500 locations to go drill. We've got over 3 billion barrels of resource to go develop there. And we're actually kind of glad people are going to the Permian. It makes our access to service costs a little bit cheaper. Our netbacks are a little bit higher because the refineries on the Gulf Coast want the condensate, and some of that condensate is dropping. So we actually see it as a real great time to be going back to the Eagle Ford. That was part of our message today, is don't forget about that. It's still a very high value, high margin, really attractive area of development.
Well, you make a good point, because if everyone goes in the Permian, obviously costs wind up going up in the Permian. Are you noticing some cost inflation in the Permian right now? Is that one of the reasons why you didn't want to really get into it as much?
We're going back. We're slowly going back into the Permian as well. We're going to put 2 rigs to work. We're going to keep appraising the acreage that we have there. We have seen some more pressures on that, and it's a little bit different kinds of pressures that you see right now. But the rig utilization rate is down, so we're not seeing really rapid hyperinflation that we saw when the prices went up to $110 a barrel. That's really what we have to control as an industry. We really got to protect the margins, and we can't let the costs get out of control like we did when we had $100 oil.
And I brought up the Permian in particular because, like I mentioned, Occidental, Pioneer, really going guns blazing in the Permian, as well as some other smaller guys. You can make an argument that they're more nimble than you. They have a higher dividend than you. Dividend used to be your thing. You had to cut that. How do you compete with them on those two metrics when they're able to rotate faster than Conoco?
Well, and I would say it's for me, it's not about chasing growth. So when you talk about rotate faster, I think the value proposition we bring to the street is very disciplined sort of growth with a focus on returns. We're an E&P company that's going to focus on returns. We're going to focus on free cash flow. So the advantage we have over the companies that you listed today is we've got a global diverse portfolio. I've got 500,000 barrels a day. A third of my production today does not decline for the next 30 years. Our capital intensity of our company is quite low. We've reduced it now down to about $4.5 billion. The companies that you talk about, other companies in the space cannot match that. So in other words, they have to spend a lot more capital to keep their production flat and grow and then the cash flow required to do that and pay the dividend is quite high. We're able to break even now at $45 to $50 Brent prices. Those companies break even at a lot higher. It takes a lot larger price in order for them to fund their capital program and fund their dividends. So what we're doing is lowering the break-even cost of the company, lowering the capital intensity. That's the advantage that we've got given our size of our portfolio.
And over the next 2 to 3 years, you guys are really in the sweet spot. You've rotated into shale. The next year, you're going to have a lot of big projects coming online as well. So you have the international big prices, and you have shale. The question then becomes, if you're growing production at 1.5 million barrels a day, a year kind of situation, how do you sustain that?
Well,
over the next, say, 10, 15 years?
Yeah, so for us, what we talk about is, with the capital intensity being down and the low decline rate in our natural portfolio, it doesn't take a lot of incremental to actually modestly grow the company. And it's interesting. I've been in the business for 35 years, always worried about where production was coming from. I don't worry about that in our company today. We have clarity we could go flat production for a decade and only spend $4.5 to $5 billion. That's not our aspiration, because we can now spend a little bit more money as the cash flows start to come in. We're going to return it back to the shareholder. We'll do that through a growing dividend and through a flexible share repurchase program. But then we can put money to a low-cost, high-margin, flexible, low-cost of supply inventory of amazing locations to drill. Not only conventional locations in our company, but unconventional. So we can grow, but we're going to do whatever returns the highest value back to the shareholder. So we're different. We're not trying to chase growth. So we're not going to chase the cycle up, and we're not going to chase the cycle down.
And you said your decline rates aren't that steep. I mean, a 30-year portfolio with 30 years without decline rates or something is pretty incredible.
Yeah, so again...
So you don't need to buy growth to offset that?
No, we don't. We've got plenty of opportunities. We've got 18 billion barrels of resource captured in our company today with a cost of supply less than $40 a barrel. That means we can make investments, generate an after-tax rate of return of 10%, and only need a $40 oil price to deliver that. And for $4.5 billion, we can maintain flat production for a decade. So that's the uniqueness of our company. That's the value proposition that we bring. That's how we compete against the names that you mentioned earlier.
So a $40 break-even, I mean, the way that the industry has been able to reduce their break-evens is incredible. Part of that has been the cost structure. As costs come down, that helped you guys. Do you feel like the lowered costs that you saw are structural or cyclical, aka when do your costs go up by how much?
So as we look at our portfolio, we made some very significant structural changes to our company. So as these major projects rolled off, we reduced the capacity of the company. We made a decision 2 years ago to get out of the deep water exploration and development game. So we've made some structural changes to our company and the costs we've done. We've gone from nearly $10 billion of operating costs to this year we laid out a plan for $6 billion of operating costs. So a dramatic 40% reduction just over the last year and a half. When we look at our plans, we would tell you that 20 to 30% of that we think may not stick, but the 60 to 70% will stick, and it's structural changes that we've made in the company. We will see some reinflation in the business as we go forward and prices start to recover. We're prepared for that, but we really have to manage the margins. This is a margin business, and capital is not necessarily your friend.
I'm going to paint a story for you. You tell me what's right or wrong about it. So you're reducing risk, you're highlighting your reserves, you're highlighting your low decline rates, you're improving your balance sheet. Are you setting yourself up to be bought? This is a perfect situation for someone to come in and say, you did all the right stuff, I'm going to take you now to the next level.
You know, I hear that. I get that question, and I think it's a reasonable question. I guess what I tell people is the best defense is a good offense. We got to do what makes sense for our company, for our portfolio, and for our shareholders. And the value proposition that we've outlined to the street today, to the market today in our analyst meeting was one about, you know, we're about growing the dividend, we're about capital discipline, and that growth can be per share growth or an organic growth and a strong balance sheet. That's how you weather the storms. That's how you weather these cycles that we're going to see in our business going forward. And it's informed by a view that we think prices are going to be lower and more volatile over time. So you've got to get your cost structure down. You've got to get your break even down. You know, if other people see a lot of value in that, you know, we're going to keep doing what we know works and what we know returns the most value.
So a sale isn't your goal, but if someone came to you, you would think about it.
Well, you have to. I mean, you have to consider everything. But no, you know, we've got a great plan as an independent E&P company. We're differentiating ourselves in the E&P space. You know, we're going to have a unique offering to the E&P kinds of investors is dramatically different than many of the other E&P companies in the world today.
I started the interview asking about Energy Secretary. Would Harold Hamm be a good Energy Secretary? Would you take the job? Your President-elect Trump called you and said, listen, well, Ryan, I need your help here. What would you say?
There's a higher calling. That's quite an honor, you know, if you ever got considered for something like that. You know, to be able to help the country and the world and move forward with some progressive policies, that's always something you'd have to consider, absolutely. But I'm happy doing what I'm doing. It's having fun doing what we do. I love this business. I love our company. I love where we're going. We know what we need to get done, and we're going to go get it done.
But that was a yes. You know what, Donald Trump, if you call him, Ryan's going to pick up the phone, or I'll send it back to you guys in the studio. Thank you so much, Ryan Lance, CEO of ConocoPhillips. Joe, Scarlet?
Thank you. That was Alex Steele with ConocoPhillips CEO Ryan Lance.
What'd you miss? Carl Icahn, Steve Mnuchin, and Tom Barrack. These are just a few of the men from the financial world who backed Donald Trump when most of the establishment didn't. So what's next for these men under a Donald Trump administration? Bloomberg's Max Abelson has been reporting on this and joins us now. So Steve Mnuchin, he was very active in the campaign as well. He advised Donald Trump, didn't he?
And it's hard to remember now that Trump won, but it seemed like a crazy thing to do only a few months ago. Zach Miter and I spent a lot of time with him and wrote a feature story about him for Business Week only in late August. And his close friends were basically like, yeah, we don't understand why Stephen is doing this. People thought it was an insane long shot bet. But he's sitting pretty now.
So he's a former Goldman Sachs banker. When Trump railed against Goldman Sachs,
that's right.
He, in the final ad of his campaign, he targeted Goldman Sachs specifically.
Lloyd Blankfein's face right up.
Is there anything about his post-Goldman Sachs experience that could suggest that he's somehow more populist or anything, or is this just?
Oh, listen, Joe. After Goldman Sachs, he worked with George Soros. George Soros' face was right there along Lloyd Blankfein's in that final quote. Remember that last
along with Janet Yellen.
Right, as the sort of the evil global elite. And then after that, on top of that, he was literally producing Hollywood movies. It's like he went out and tried to touch every...
Goldman Sachs to Soros to Hollywood.
That's right.
and now potentially, we don't know for sure, but the Treasury Secretary under this populist administration.
I think that that's an important thing to remember. I think it's an important part of what we're going to start seeing now, that Trump, even though he got to where he is the president-elect of the United States by sort of bashing the global elite, these are the people that are around him. Earlier today, there was a rumor that Jamie Dimon was under consideration for the Treasury Secretary. You'd have to really search hard to find someone who's like more a member of the financial establishment than the chief executive officer of J.P. Morgan. But Donald Trump may have mocked them and insulted them a few months ago, but even then, he was friends with a lot of these guys.
So tell us a little bit more about Steve Mnuchin, because after spending time with him, do you see his fingerprints all over the kinds of policies that Trump has proposed?
The interesting thing about the sort of financiers who are around Donald Trump is it's very hard to find a sort of like unified policy that unites these guys. My take after spending time with them, and I think Zach, my colleague, agrees, is that the unifying force is that they were Trump loyalists. These are guys who support Donald Trump. Even after many hours on the phone with Stephen Mnuchin, I didn't get an idea that he was a policy wonk or that he had religion one way or the other.
He liked Trump.
And that's exactly right. It's just like Trump. And Trump is himself, by the way, a billionaire, just like a lot of these guys are. Carl Icahn is a billionaire. Wilbur Ross is a billionaire. He's surrounded by wealthy people, not surrounded by, random folks.
Another guy in the financial orbit who's into Donald Trump and was a fundraiser and backer, Anthony Scaramucci, who tweets a lot. And one thing he tweeted about is the rule that said financial advisors would have a fiduciary responsibility. He hates that rule. He wants to overturn it. Is that gone, that rule, under a Trump administration?
Well, first of all, we have to finish that thought, because you are so right that Scaramucci tweeted about it, and he compared it to the Dred Scott decision, which I feel like even fifth graders know that the Dred Scott decision from the 19th century was, said black Americans aren't citizens. So it gives a little insight into, the way these guys see the world. Scaramucci feels really strongly about that Labor Department rule, which is a sign that that's one of the things we might be seeing chucked out of the window. And it goes on. I think it's either...
That was just a regulation. That's not like a law that has to be overturned. That's just something that whoever is in charge of the Department of Labor can on day one just say this is not a regulation.
That's right. And it's funny that you put it that way, because I think it's either Wilbur Ross or Carl Icahn, who on Bloomberg TV talked about how on day one, he wants to see the Environmental Protection Agency, the EPA. He said that on day one, Donald Trump can sign away a lot of the laws, a lot of the rules that annoy him from the EPA. So these backers, I think, have high expectations about all the deregulation that they're going to want to see in the environment, in finance, Labor Department.
So what are they most keyed up on? What have you heard from them that they really want to see tackled first? Is it tax reform? Is it getting rid of those regulations?
The truth of the matter is that, I think my memory is that Stephen talked about, he wants to see less government. I think that, we didn't try too hard to press him on details because the details weren't forthcoming. But I think it's fair to say if Stephen were here, he would say, look, Donald Trump and I agree on how we see the world, and we want less government, and we want lower taxes, simpler taxes, and it's hard to imagine that anything but that is what they're going to be pulling for.
One more question. CFPB, a sort of signature bureau under Obama, came about Dodd-Frank. Is that even going to still exist? Will it have a role anymore?
I mean...
Also, it should be noted, Wells Fargo, one of the big winners in the post-Trump, post-November 8th.
That is exactly... See, you and I are friends. That is exactly what I was about to say. I think Wells Fargo's stock price today, we have to check the charts, I think it is higher than it was before the scandal hit.
When did the scandal hit?
We're gonna,
it's
going to be like a sharp
That's a great chart. Let's blow that out.
This is a very proud moment for me here. I'm emphasizing a chart.
Come inside my Bloomberg here, and this is Wells Fargo's
Look at that
chart
surge.
You're
right. It's back to levels it wasn't since this spring. So that shows how much the Trump presidency is worth to
all the way back to January, in fact.
There you go. Shout out to Laura and Alan, my colleagues, who pointed that out to me earlier today. But look, that kind
of says it all.
There are a lot of dynamics that go into it, but I think there must be people who are awfully happy that the Consumer Financial Protection Bureau looks like it might not exist in a year, because the CFPB is the type of agency that went after Wells Fargo and their malfeasance really, really hard.
That's a great chart. Bloomberg's Max Abelson, so great to have you on.
Thank you.
Appreciate your insight. Thanks for coming on.
All right, let's get you to the Bloomberg Business Flash. Look at some of the biggest business stories in the news right now. U.S. regulators rushing to issue sweeping limits on Wall Street pay before President-elect Donald Trump is sworn in. That's according to people familiar with the effort. The rule on finance industry bonuses is the last major unfinished piece of the Dodd-Frank Act. Trump's transition team says it will dismantle Dodd-Frank and replace it with policies that promote economic growth and jobs. Energy Transfer is doubling down on its pledge to have its Dakota Access Pipeline running by spring of next year. It's betting that Trump's victory will pave the way for an easement from the Army Corps of Engineers. Energy Transfer is at the center of a battle over pipeline construction across the nation. Its $3.8 billion pipeline is a rallying cry for the anti-fossil fuel movement. It also faces stiff opposition from Native Americans. And that is your Business Flash update.
Up next, Trump's victory was good news for some stocks, bad for others. We're going to talk about a few of the stocks that it's hurt next. This is Bloomberg.
I'm Scarlet Fu. What'd you miss? New energy companies are running out of steam since Donald Trump's surprise victory in the presidential election. So what you're looking at here is the percentage change, the daily percentage change of solar energy companies, which is in green, wind energy companies, which is in blue, and new energy companies overall in white. And I want to zero in on the move yesterday. It's marked by that oval circle over there. That was the steepest drop in 6 months, and it came yesterday because of Trump's position on climate change. Remember, the president-elect has called climate change a hoax. And if you look at that decline, it is the biggest decline since going all the way back to June. So the biggest decline in 6 months. Now, to be fair, this is a performance. It's not fund flows. And what we know is that these kinds of companies actually fared pretty terribly under President Obama, who was certainly for alternative sources of energy. In fact, I was looking at it, and since President Obama was inaugurated in January of 2009, you had new energy stocks down about 3.4% in the period, wind energy down about 5.9%, and solar energy companies down 40% in that period. So it's not like the performance has matched the mandate from the new administration.
That is a pretty striking chart, pretty decisive verdict, particularly as other indices have been surging. So
absolutely.
Anything that's losing now, you know it's losing for a reason specific to this administration. All right, I want to look at an interesting macro thing that Neil Dutta of Renaissance Macro pointed out. It's look at the price of copper futures versus the Chilean peso. Chile is a big copper exporter. It's a big part of the economy. And as you can see on this chart, the two lines, the blue line is Chilean peso. The white line is copper. They kind of moved together for the last year because they're so connected. Copper prices are absolutely surging. You can see the white line just going through the roof the last several days. This is on this belief that there's going to be this huge Trump stimulus plan. That he's going to build all these highways and all this stuff and, whatever. That is going to require a lot of copper. But notice the blue line at the top. It's not surging. If we could zoom in at the very top there, you can see it's actually dropping a little bit post-Trump. And so Chile is not gaining. And so this reflects the sort of view that, while, yes, sure, the Trump administration might want to spend a lot, theoretically, on all this stuff, it's not necessarily going to be good for world trade, emerging markets, our trading partners, stuff like that. So the Chilean peso isn't enjoying the ride up. A kind of fascinating divergence.
I love the fact that your chart highlights two of Trump's policies right there.
2 in 1, yeah, exactly.
2 in 1.
So
this is fascinating.
Deep, when a correlation breaks down, says something interesting.
A lot of breakdowns in correlation in the coming weeks and months to come. All right, the market close is next. Take a look at the major indexes. With less than 4 minutes to go before the close, the Dow Jones Industrial Average at a record high, up 216 points. The S&P gaining 0.2%. The Nasdaq extending its decline. It's been deepening as the afternoon goes on. This is Bloomberg. Moments away from the closing bell. What'd you miss? The Dow Jones Industrial Average closing at a record high. I'm Scarlet Fu.
I'm Joe Weisenthal. Welcome to our viewers who are tuning in live on Twitter. You can watch our closing bell coverage on Twitter every day from 4 to 5 p.m. Eastern Time.
We begin with our market minutes. The Dow Jones Industrial Average closing at a record high, gaining more than 200 points. So this is a solid rally. Financials leading the S&P 500 gaining higher as well. And if you look at the industry groups, 6 out of 10, 11, I should say, groups finishing higher. So a pretty decisive gain here for the S&P as well. What's notable, of course, is that the Nasdaq is slumping. So a huge divergence between the Dow and the Nasdaq here.
Fascinating divergence, and I'm going to talk about that more very shortly. But yeah, that is kind of the story. Big surge on the Dow 2 days in a row, but S&P kind of going nowhere. and NASDAQ, really those FANG stocks getting clobbered.
Yeah, and we should mention as well, bonds selling off as well. We'll get to that in a little bit. I want to start with the different sectors and take a look at how Donald Trump's victory, his surprise victory, is really driving some of these performances. Banks and healthcare companies, and of course these are the ETFs that track the sectors, they've been performing fairly well because Donald Trump has promised to roll back regulation on these industries. Industrial is also another big winner. All the infrastructure spending that he has promised really being priced into this sector. Joe, you mentioned the FANG stocks. Let's take a look at some of the tech names, especially Facebook, Amazon, Netflix, and Google, or now Alphabet.
Wow.
Down by at least 2% there. And of course, as Julie has been pointing out, a lot of their CEOs have been pretty active and pretty vocal about who they supported during the presidential election campaign. So you wonder whether there's going to be recrimination, or maybe that's just speculation that there might be, and that's being
or just culturally, maybe their moment is kind of moving on.
That's
I don't know. It's a fascinating observation there. Let's look at government bonds, because that is the key story. Continued higher yields. 2.14% on the 10-year. I mean, we were like at 1.7% the other day. It is extraordinary move, the rise in the long end. We're going to be talking about it for a long time in terms of what this means, what investors are pricing in. You showed earlier on the show an increase in Fed bets coming forward.
Yes.
Huge developments in the rates market. Investors possibly betting that Trump can break the sort of disinflationary spiral. I also want to take a quick look at Germany, because it's not just in the U.S. German bond yields also rising, 0.27 now. You know, we made such a big deal when they turned positive.
Yeah.
You can actually get paid to hold German bonds, which is pretty remarkable.
All right, Donald Trump steeping yield curves around the world. Let's take a look at currencies. The dollar extending its gain. It's now up for a third day in 4. It's shot up to an 8-month high as well. Against the yen, the dollar has moved past 106, and it got within spitting distance of 107, which, by the way, is now 4-month high. We're also seeing a sell-off in Latin American currencies. There's speculation that the Fed would turn more hawkish because Donald Trump's proposals, or I should say proposed policies, would be inflationary, and that would make these higher-yielding currencies less attractive. So, of course, when you look at the green arrow, you're looking at the gain in the dollar versus the Mexican peso, versus the Colombian peso, versus the Brazilian real. The real, by the way, falling the most in 5 years. Year to date, though, it's still the best performing currency.
And finally, commodities. You know, all those bridges aren't going to build themselves. They need copper and iron ore and zinc, and those are all surging. They've had a few straight, huge days in a row. So there's not much more to say except hard commodities are doing very well post-election.
And this is inflationary as well.
Exactly right.
All right, those are today's Market Minutes. We're going to take a deep dive now into the Bloomberg. You can find all the charts, or the chart, using the function at the bottom of the screen. And Joe, let's go back to equities.
Yeah, so you noticed that the Dow was doing really well, and the NASDAQ was doing badly, and the S&P wasn't going anywhere. And I just have to say, it seems sort of Trumpish that the Dow stocks, the old-fashioned, old economy, America companies would do really well, while the other indices would languish. Like, that just seems right. So I made a chart of the Dow S&P ratio going back to 1960. And I noticed something interesting. The red shaded areas are obviously every time there's a Republican administration. The blue shaded areas are when there's a Democrat. When there's a Democratic president, the Dow S&P ratio always seems to go down. It mostly went down during Clinton's administration, though it changed at the very end. It went down during Obama and down during Kennedy and Johnson. And then during Republican administrations, the Dow rises against the S&P, as you see there, and during the Reagan years and during the Bush years. So I don't really know. I think maybe when America takes a turn for more conservatism, the people favor the old-style American companies, and when they turn towards liberalism, we favor like the broader, diverse range of companies that mix it up more, the less brands. So we'll see what happens. We'll see if, we have already seen the Dow significantly outperform the other indices. We'll see if that continues under the Trump era.
This is a great chart. I love it. And I wonder, and maybe we'll...
I cheated a little bit. I have to admit.
What?
So
How?
in the final 2 months of the Clinton administration, it did turn around. And so that was that at the very end during his lame duck period. You see this. So it's not perfect. That was under Clinton. There was a big surge in
But it goes all the way back to the 60s, and it pretty much holds
true. But it is kind of remarkable. So I'm just pointing that out.
And, one day we're going to have to look at the Dow versus the NASDAQ as well, given today's performance.
Yeah. All right, so let's get more insight on the markets after the second day of trading following Donald Trump's presidential win. Joining us now is Jeff Kleintop, Chief Global Investment Strategist at Charles Schwab, and we're also joined by Bloomberg stocks reporter Oliver Rennick. Jeff, what do you think about my crazy theory?
Well, it's an interesting one. What we know about the Dow is it's very industrials heavy. And what's infrastructure? It's industrials, right? Whereas the S&P, a little bit more to tech, a little bit more to financials, which tend to be driven by different elements of the economy and a different relationship with inflation. So I don't know. I'd have to look at those dates pretty closely. But it's an interesting relationship.
You're not going to be including it on any of your CarPax. All right.
Can I add to that?
Yeah, please.
That's a great point. I've also got, I don't know if you want to jump in the terminal, but I've got the sector breakdown here. This is part of it, as Jeff points out. You've got big industrials, about a 20% weighting. Tech has a smaller weighting. Now, it's 17%, but if you look at the S&P, tech's a lot closer to about 20-21. So if you're of the belief that there's going to be a big rework in terms of the trade, agreements and whatnot, then potentially some of those sort of multinational and big tech companies could have some problems. Then you've also got financials about 17%. So that's going to be helping as well, as we've seen those financials do pretty well. Bigly, as they would say. Bigly.
Nice.
Or big league. I believe it's big league.
Well, that's related to the story we were just talking about the steeper yield curves. And this is true globally, right? We just saw it in Germany. We've seen it in a number of places. That's helping financials not just in the U.S., but around the world. True for industrials as well. Industrials everywhere, even in Asia, are picking up on this. Trump having global implications for bonds and stocks.
No, absolutely. Although, having said that, when you look at how some of the companies within the U.S. are performing, you point this out in your latest note on equities, which was fairly bullish overall. Small cap companies are doing better than large cap companies. And maybe, Oliver, you can speak to this chart here with the Russell 2000 outperforming the S&P 500.
This is fascinating because, as Jeff and I were just talking about, going into this event, the election, the markets had a very sort of risk-off kind of mentality about the Trump's potential Trump victory. There was going to be volatility. We saw markets doing poorly on days in which it
People
polls
were
did well.
warning of recession.
Right, but now, not only is it not risk-off, it is extremely risk-on. People are finding it advantageous to get into what is typically the most high beta part of the market here, which is small caps. But then it comes back to the sector breakdown as well. The same thing is happening here, where they're heavily weighted to financials, that, as we've shown before, painstakingly so, that they're the most tied to Trump's chances. And it's also domestic facing. So if you're doing the whole, America first attitude and, we're going to put all our money here.
You got to figure small cap finance likes deregulation.
Absolutely. And they probably also apparently might like higher rates. It's a big loan lending part of the business as well.
Something you alluded to was steepening yield curve having ramifications across all asset classes. I got a chart here. We're talking about the ever controversial Fed model, which tries to come up with some relationship between bond valuations and stocks. If bond yields go up, that's bad for certain categories of stocks. What do you think of stock valuations here in light of a rising rate environment? Is there a connection?
Well, there's always a connection between interest rates and stock prices. I think stocks being very much tied more to earnings prospects, I think, in the next year, after 2 years of an earnings recession, than necessarily where interest rates are headed. Valuations may be under a little bit of pressure, given the uncertainty of what a Trump presidency means in terms of how it'll govern. But what we do know is earnings likely at a turning point. They're the lifeblood of the stock market.
Yeah, when you look at profit margins, and I know that this is overall not just for the U.S. companies, but for global companies, you say that they're in the middle, but not the top of a long-term range, 20 years, right?
This is so important. 10 years ago, when we look at the lost decade here for the equity market and for earnings, one of the reasons is profit margins were at all-time highs. They are now just below the long-term average. That means we don't have that drag of slowly drawing down our revenue per unit anymore and have to grow sales volume to keep up with it. That's great news for profits going forward.
Oliver?
I think when you look at stocks, bonds, I think ultimately at the end of the day, if you're going to be long stocks, the kind of mentality is, hey, this is not going to change the sort of earnings rebound that we're starting to see a little bit. It's not going to at least immediately derail the sort of economic improvement. However, what I'm curious about is when you look at the valuation case for stocks, the only one that's really been there is that sort of Fed model, whether you like it or not. People have said, well, guess what? You're not going to get much in the bond market, so go into some higher dividend yielding stocks, et cetera. So I'd be curious, Jeff, at Schwab, when you have clients talk about valuations in stocks, is this going to be sort of moving to the back of the pack when you say you look at higher yields, you see yields going up on the 10-year, suddenly you're kind of losing one of those potential justifications for buying equity?
Historically, over 5% on the 10-year is where rising interest rates become an impediment to valuations. Below that, actually correlated with higher stock prices. Yeah. Rising interest rates means better economic activity, better inflation, good for stocks.
Jeff, one of the oldest cliches of all markets is that markets hate uncertainty. And with Trump, there's so much uncertainty. And that's not even necessarily a judgment on him. That's just a fact that we don't really know where his policy stands are on a lot of things. Also, the fact that, geopolitically, there are all kinds of interesting there are all kinds of ramifications that we don't know how they're going to play out. Why do we not see more anxiety, frankly, on the part of the market on these big unknowns?
Well, uncertainty doesn't necessarily mean bad things. The market usually doesn't like uncertainty, but it could mean some positive things, too. We just talked about infrastructure, a steeper yield curve, maybe new regulation in the healthcare sector. Markets focused on those things. Look, when Trump made his acceptance speech, he talked about infrastructure, not the negatives of trade, not politicizing the Fed. Those days are coming, and that's why this isn't a trend to the upside, but a trend of volatility. We've seen the upside moves. There'll certainly be some negative days, too.
And when you go back to the fundamentals, and certainly for equities, and you look at it at an index level, and so many people do now because of passive investing, you've pointed out that earnings is much more balanced now across sectors, that we're not reliant on one or two industries the way that we were decades ago.
Yeah, back in 2007, nearly 50% of the S&P profits came from energy and materials. Wow, we've come a long way since then. It's now almost perfectly evenly divided across sectors, making a much more robust basis for profit growth going forward.
All right. Thank you, Jeff Kleintop, Chief Global Investment Strategist at Charles Schwab, and Bloomberg stocks reporter Oliver Rennick. Thank you both for helping us break down another extraordinary day in the stock market.
All right, coming up, Disney earnings expected to break any minute. We'll give you all the details on the media company. This is Bloomberg. A beautiful late afternoon from Midtown Manhattan here, 2 days after Election Day, as everyone continues to digest the surprise election victory of Donald Trump.
We never get to see sunsets now that we work inside, so I'm glad we get to see them on video.
It's beautiful, right?
It is very beautiful.
Okay, so we're awaiting Disney earnings right now. And, Joe, what I thought was interesting here as we wait for Disney to cross the wire right now is that the lower political advertising is expected to hurt cable networks' revenue for the company. It's something that every analyst has pointed out.
Yeah, I mean, that's all going to disappear.
You know what?
Here we go. We don't have to speculate anymore.
There we go. Fourth quarter adjusted earnings per share of $1.10. Analysts were looking for $1.16, so that is a miss. And it is also a decline because last year at this time, Disney had reported $1.20 earnings per share. Revenue is $13.1 billion. Analysts were looking for $13.5 billion, so this is also a drop from the same time last year because the consensus estimate was for no change in revenue from the same time last year. So a miss in the bottom line and the top line.
Interestingly, Media Networks revenue slightly beat expectation, $5.66 billion versus $5.6 billion. And I wonder if that explains why this loss here we're seeing in the after hours is not quite as bad, only 2%. I think on the, at first you would imagine that this would be disastrous, but right now just sort of a modest sell-off in Disney.
And Media Networks revenue, $5.7 billion. Am I looking at this correctly? It looks like... Oh, here we go. Media Networks revenue was expected to be $5.6 billion, so that is better than expected. Yeah. And in terms of parks and resorts, the revenue there was $4.39 billion. The consensus estimate was for $4.67 billion.
That is a big source of the miss. Also, consumer interactive revenue, $1.29 billion versus $1.48 billion, so pretty substantial revenue miss on that.
And one thing that everyone seems to point out among the analyst notes that I've been looking at is that there was one less week in the quarter this year, so you kind of have to factor that in when you get the numbers on these advertising revenue and how that might play out when you compare it to the same time last year. So that seems to have a big impact as well. But again, we go back to that idea that U.S. advertising revenue has been declining because of less political advertising spending and also the Olympics competition, too.
All kinds of things are going to be going away.
All right, I want to bring in Geeta Ranganathan from Bloomberg Intelligence, who follows the media companies and has been tracking Disney in particular. She joins us now from Princeton, New Jersey. So, Geeta, a miss here for Disney on fourth quarter earnings per share as well as revenue. I know that people were looking at some softness because of this calendar glitch here, but is this a surprise to you?
I don't think so. I think a lot of people were, as you correctly pointed out, expecting that tougher comp from last year when you had that extra week. Management actually pointed out about $350 million in operating income headwinds. So I think this was expected a little bit. And then, as you rightly pointed out, Scarlet, ratings are under pressure, and so there's obviously a lot of squeeze when it comes to advertising revenue. And the same thing happened a little bit on the park segment as well.
We should mention as well that operating income at cable networks dropped $207 million to $1.4 billion. And the company says that was due to decreases at ESPN and the Disney channels.
Geeta, one of the big stories in media has been the collapse of NFL viewership. And people are hopeful that maybe when the election's over, people will want to watch football again. But, what if live sports just isn't the draw that it used to be? How big of a deal is that if there starts to be a live sports bear market?
Yeah, I mean, this has been a huge source of angst for investors with the NFL ratings. I mean, what we've seen from some of the media executives so far is they're saying that there's been this big drop in ratings, mainly because of the election coverage, and there's been a whole lot of other noise factors as well. Sports is a very, very big area, of course, for all of these media companies, and especially for Disney, because it gets almost half of its operating profits from its cable networks division, which has ESPN, which is all sports content. So it's a huge draw. But then again, we go back and we see the World Series, and we had absolutely fantastic ratings. Sports still command some of the highest ad prices. So, I think it's still in a pretty good spot. But then if these ratings declines continues, then that can obviously be a big source for concern.
Right. And some more headlines here on ESPN. According to Disney, advertising for ESPN had fewer impressions and lower rates. Disney also had higher programming and production costs. I like what you said earlier, Joe, about a bear market in live sports. These headlines don't push back against
fewer ad impressions and higher costs is pretty much exactly the opposite of what you want to be talking about a business.
So, Geeta, when you look at live sports and how much it's been a driver for these media companies, not just Disney, but we can also extend this to CBS, for instance, how much do the companies maybe need to rethink their business model? Because they have been pouring so much resources into live sports that if it is indeed turning and has reached an inflection point, this is something that they need to pull back from.
Yeah, but they've already invested a lot of, as you point out, it's obviously going to be a big source for concern, but they've already poured a lot of money. Now, for Disney, that is the big factor because they have something like about $53 billion in sports programming commitments. The question is, what do they do? What do they do next? Because they're having a dwindling subscriber base. They're having all of these sports costs that they're going to have to meet. So, I mean, the big question is, how do they get their programming out there? How do they get more and more people to watch this? And so they did make an investment last quarter in a company called BAMTech, which basically will allow them to take some of their ESPN content over the top. Now, I'm not sure that they're going to put all of their premium content out there, but they're obviously going to be thinking along those lines.
Okay, and last question to you, Geeta. Bob Iger is 65 years old. He was supposed to retire, I believe, this year or next year, and that got delayed. And then his successor, the plans that they had laid out didn't exactly come to fruition. What is next here in terms of management succession at Disney?
Yeah, they've been really quiet on this front. I mean, we know that Bob Iger, I mean, there's still some time, obviously, for Bob Iger. His contract expires in June of 2018. We haven't really heard anything from them over the past 5-6 months, except that there is this internal process going on, and both internal and external candidates are being evaluated. Now, this is a little bit disconcerting, I think, for investors, because they really had a textbook succession plan in place, and obviously all of that kind of went down the drain when Tom Staggs quit. The thing is, you know, if nobody doubts the capability of Bob Iger, so, you know, the board could very easily ask him to stay on.
That would be interesting. Well, we'll find out more because, Geeta Ranganathan, thank you so much. But we will find out more because Disney CEO Bob Iger will be speaking to Bloomberg. He'll be interviewed today on Bloomberg Technology with Emily Chang at 6:30 p.m. Eastern Time.
Coming up, we'll talk with Philippe Legrand, visiting senior fellow at the London School of Economics. He talks about Trump's policies and whether we could have a protectionist trade war. This is Bloomberg. Donald Trump has spent a lot of time talking about trade. He's vowed to kill the Trans-Pacific Partnership, labeled China a currency manipulator, and renegotiate NAFTA. Our next guest says Trump's protectionist policies could spark trade wars and more. Joining us from London is Philippe Legrand, visiting senior fellow at the London School of Economics. and political science. Philippe, thank you for joining us. So far, markets not concerned about the trade side of Trump's economic policies, mostly seem to be thinking about the taxes and spending, it appears. But you think it could have pretty severe consequences. Lay out some of the ramifications of Trump's trade policies on the world.
Well, you're absolutely right that after the initial shock of Trump's victory, that markets and everyone else are trying to look on the upside. And, clearly, as you pointed out, some of the fiscal policy could be positive. But the potential for protectionist trade wars, which could actually cause the collapse of the multilateral trading system, could cause a global recession, which would dwarf anything that Trump would be doing domestically. I mean, as you said, he's not going forward with a TPP. I think the TTIP talks, which were already stalled with the EU, are dead. Renegotiating NAFTA, who knows what that means, but, Canada and Mexico, both big trading partners. If he does slap tariffs on Chinese trade, the Chinese will clearly retaliate, and that leads both to inflation in the United States, it leads to slower growth, it leads to the disruption of supply chains, it leads to lower exports for U.S. companies, and it leads to a global system in chaos. If you went even further and actually pulled out of the multilateral trading system of the WTO, which is the rule-setting body and the forum for global trade, then I think the consequences would be very severe indeed.
Right. I mean, the hypothetical ripple effect is pretty extended. Philippe, 4 months after the Brexit vote, what can we learn about how the UK is proceeding with that process? Because so many people draw comparisons between what happened this week with the Brexit vote. What might we learn, or how might it inform us about how the U.S. proceeds?
Well, clearly, there are some people in Britain who are very happy with the Trump victory. They think that while Trump hates free trade in general, that he's going to put Britain at the front of the queue for some kind of special treatment, and we'll see if that turns out to be the case. I think that if we are heading to a world of rival trading blocs, then the UK might find it very lonely out there. If the US goes protectionist, Europe tears itself apart from Europe, Asia coalesces around China. That kind of world is not the global free trade world that the Brexiteers were promising.
All right, Philippe Legrand, visiting senior fellow at the London School of Economics. Thank you for joining us and spelling out some of the ramifications of what could happen.
Coming up next, will the Fed change their outlook for the economy since the victory of Donald Trump in the election? We'll discuss. This is Bloomberg.
In San Francisco.
I'm Mark Crumpton. Time now for Bloomberg's First Word News. President Obama described his Oval Office meeting with President-elect Donald Trump as excellent. Mr. Trump noted that the two men never met and added that he, quote, very much looks forward to meeting again in the future and seeking Mr. Obama's counsel. The White House press secretary Josh Earnest was asked what, if anything, was achieved.
I feel confident in telling you that they did not resolve all their differences. I also feel confident in telling you they didn't try to resolve all their differences. What they sought to do was to lay the foundation for an effective transition from the Obama presidency to the Trump presidency.
The meeting, originally scheduled for 10 minutes, lasted nearly an hour and a half. A federal judge has tentatively denied a request to ban statements made by and about President-elect Trump at the trial involving Trump University. The proposed ban would apply to Trump's tweets, a video of him making predatory comments about women, and his public criticism of the judge in the case. Federal Judge Gonzalo Curiel said he was unprepared to issue a blanket ban, but would consider more specific requests at the trial that begins November 28th. Mr. Trump has selected GOP maverick Ken Blackwell to lead his domestic transition team. Blackwell's role on the team appeared on an organizational chart obtained by the Associated Press. The Ohio Republican is on the boards of the National Rifle Association and Club for Growth. He's also a senior fellow at the Family Research Council. A UN official says the last food rations inside eastern Aleppo will run out by next week. The last time the 250,000 people trapped inside the Syrian city received any humanitarian aid was at the beginning of July. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. Joe, back to you.
All right, let's get a recap of today's market reaction. Day two of the Dow Jones surging post-election. Brand new high in the Dow, extraordinary gains over 200 points. Unlike yesterday, the gains were not as widespread across other indices. Tech really got smashed. The FANG stocks really getting hit hard, as Scarlet showed earlier. And so the NASDAQ actually down 0.8%, and the S&P 500 not going anywhere. Industrials, industrial metals, financials, those continue to be the big winners of the post-election trade.
Well, there might be a drag on the Dow tomorrow because Disney reported earnings after the close today, and its profit and sales missed analyst estimates. They also declined from the same time a year ago, and they mentioned that the advertising situation for ESPN was kind of soft as well. Impressions were lower, and it was also the rates were lower, even as programming and production costs increased. And, of course, we care about ESPN because it makes up a huge portion of their media network's revenue overall. So Disney down in 2% in after-hours trade.
What'd you miss? Will the election of Donald Trump as U.S. president delay an interest rate hike next month? St. Louis Fed President James Bullard said no. He said, we are basically on track the same way we were before the election. I'm not seeing enough volatility here to change my basic projection for the economy. To discuss the economy and markets in the wake of this shocking electoral result, I want to bring in Eric Lonergan, fund manager for M&G Limited. Eric, it's great to have you in the studio.
Great to be here.
You followed Brexit closely, obviously, in the UK. Then you came here to follow the U.S. election. Everybody is trying to make parallels, trying to learn lessons one to the other. What are your observations coming from an outside perspective of what we have going on here?
Yeah, I mean, well, there are parallels and there are big differences. So the parallel that I observe is undoubtedly populism as an electoral strategy. Right. And there are a lot of similarities. So populism was used during the Brexit debate to create allies that are unnatural. You know, different regions and different vested interests economically became allied around a single cause. And I think that's what we've also seen with Trump when you look at the distribution of his supporters and the voting in favor of Republicans. But what I would say is that it's not a coherent set of policies. So it's an electoral strategy, but not a coherent set of policies. And it feels to me the mood here in terms of the actual policies that are being proposed is very, very different to the post-Brexit world that we experienced in the UK.
Right, so the immediate aftermath is this sort of expectation that we're going to get this big stimulus jolt. Like if you look at shares of Caterpillar, they're surging. We see the industrials generally doing really well, financials. do you think that that's sort of a sustainable gamble?
Well, I think there's a couple of fascinating things about it. I mean, I have to say, if I listen to Trump's macroeconomics, it could be Larry Summers, right? I mean, his opening speech is about infrastructure spending. So the interesting thing is that in one way, this is conventional Keynesian economics.
Right.
And again, I would say that's a very, very big contrast to the Brexit narrative, which has been clearly growth negative, even though the economy is surprised. It's all been about controlling the free movement of people, leaving the single market. Whereas, if I listen to Trump, he looks macroeconomically, this sounds Keynesian. Microeconomics and social policy, it looks like, it's House Republicans. It's about deregulation. So, so far, everyone's gone silent on all of the other policies that might be negative for growth.
Right. They're just not sure what's to come yet. You brought in a chart with you, and I have it here on my Bloomberg, which looks at the 30-year yield and how it's moved. That's the white line there, and certainly it's spiked up recently because people are thinking that Trump's policy proposals sound inflationary, or they should boost inflation. And then we've got the jobless claims, which has been steadily declining. I mean, over longer terms, certainly it's been near record lows. Talk to us about this chart here.
Yeah, well, the thing I think here, what's very important is to understand how asset prices work. Right? And so the first thing that you can observe straight away is there's been actually, the economic facts in the United States have been remarkably stable. But look at the volatility. So this is year to date. Look at the volatility you've seen in beliefs about 30-year interest rates. I mean, these are absolutely huge moves. So you start the year pretty close to 3%. You can see you've had two major shocks. In January and February, you get a shock. People are worried about a recession, but also the Japanese move to negative interest rates. And then in the middle of the year, you get the Brexit shock, where the Bank of England did more QE, cut interest rates. And now you've had it from then an 80 basis point sell-off, even more than that, and you're pretty much close to your starting point. Now, that's against a backdrop of relatively stable economics. And I think it tells you an awful lot of things there. It tells you about perceptions of risk, and it just also tells you that the price itself can construct the narrative.
I love that point that price itself can construct the narrative, because it always seems that we tell the story after the fact. So I think if stocks had continued to crash like we saw Tuesday night, people would be telling a story about uncertainty and populism and recession.
Absolutely.
And instead we're telling a story about infrastructure spending and reflation. Speaking of reflation, now people are actually betting that the Fed can get off zero even faster than they were. If you look at Fed futures implied yield on this chart, the white line is the day after versus the day before. We continue to see faster rate hikes now expected.
Well, I mean, to your point, the other thing I would mention to you is, what happened to the bond shortage?
Right.
I mean, post-Brexit, we were running out of them. There doesn't seem to be a shortage today.
No.
So now, does it change Fed policy? I think it's way too early to make that call. I mean, I think the big question for me is this a Republican alliance that doesn't believe in deficits anymore, right? So that ultimately raises the interest rate question.
We don't really totally know how much the rest of the party would go along with all
does Paul Ryan give up all pretenses to fiscal austerity and and being careful with the budget?
That feels to me implausible at this point, or certainly that's going to be a battle. I mean, if suddenly the debt ceiling doesn't matter, suddenly deficits don't matter. So is it pure, Reaganite, pro-cyclical fiscal stimulus? Clearly, that's part of the probability distribution. But I think what's very important to bear in mind is...
We can bring this chart back up. Let's bring it back up so we can continue to talk to it.
Yeah, bonds and rate expectations have shifted so dramatically. Again, you remember, that you've got that trend on jobless claims. The U.S. labor market has been strengthening consistently now for 3 years, and yet you had a lot of people abandoning their medium-term beliefs about interest rates. That is very often a strong contrarian signal. When you have Fed governors now saying we're in a new regime of lower than ever real interest rates, it shouldn't surprise you then that you get something approximating a bond panic.
So this is the market's interpretation, the market's impression, and how they're positioning themselves. What about the Fed? We heard from James Bullard, but how does the Fed interpret the election results? And
will there be a monetary offset, as people are talking about today?
Well, the really interesting thing is, I remember Janet Yellen over the summer speaking to the Senate saying, to be honest, we could do with some fiscal stimulus. So again, here I think the economic discourse is very ironic relative to sitting in Europe and the UK, because Trump, Yellen might actually find a lot of common ground.
Who would have thought? All right, Eric Lonergan, fund manager for M&G Limited, is staying with us. He's visiting from London. We're going to discuss rising inflation expectations next. This is Bloomberg. I'm Scarlet Food. It's time for the Bloomberg Business Flash. Look at some of the biggest business stories in the news right now. U.S. regulators are rushing to issue sweeping limits on Wall Street pay before President-elect Donald Trump is sworn in. That's according to people familiar with the effort. The rule on finance industry bonuses is the last major unfinished piece of the Dodd-Frank Act. But Trump's transition team says it'll dismantle the law and replace it with policies that promote growth and jobs. LinkedIn may be blocked in Russia. A judge has found the company broke a law requiring personal data of Russian citizens be stored inside the country. Access to the social networking site could be denied as early as next week. Russia's main antitrust regulator has opened a case against Microsoft, which, as you know, is concluding a $26 billion acquisition of LinkedIn. And here in New York, Manhattan landlords are giving renters more financial incentives than ever as the market gets flooded with new supply. A report by appraiser Miller Samuel and brokerage Dilgos Elliman Real Estate says that lease signing sweeteners, like a month of free rent or payment of broker fees, were offered on 24% of new rental agreements in October. That is a 6-year high, and it's up from 10% a year earlier. And that is the Bloomberg Business Flash.
What do you miss? Inflation expectations surging to the highest since July 2015 as traders foresee a Donald Trump administration. I think there's the wrong chart.
Let's
look at the one that Scarlet has. Republican-controlled Congress boosting fiscal stimulus to stoke economic growth. Still with us is Eric Lonergan, fund manager for M&G Limited. 10-year break-even surging. What's going on? Is this a logical response to what we've seen?
Well, there's two things I say here. The first one is in terms of that break-even chart. What you do find is it's just positively correlated with what the nominal rate does.
Right.
So I think there's one key factor to bear in mind we were just talking about is the risk properties of bonds.
Right.
And one of the themes we've been chatting over several months, I've mentioned to you before, is this whole issue of volatility aversion.
Right.
We live in a world where investors are myopic, hugely averse to volatility. They've perceived government bonds to be safe assets. They're waking up to the fact that they're actually very risky. And I think that's part of the factor here is volatility and price itself itself is driving these yields.
So you can actually lose money on government bonds is kind of the lesson here. During the financial crisis, it was so scarring that the main thing people wanted to find in their investments were assets that you were perceived to be risk-free. And what you're saying is the perception of bonds as risk-free investments has changed dramatically.
I mean, absolutely. And you know there was the whole narrative and the stories about shortages of bonds,
right,
shortages of safe assets, collateral. I've never been a big buyer of that, certainly not in the super liquid assets like the Treasury bond market. And so I think a big part of it's very easy, as I said, to rationalize what's going on based on our ability to see policies that are going to emerge. A lot of this is just price itself.
I want to look. Here's one of the memes that's been around for a long time is that there's no inflation anywhere. We're stuck, never going to get inflation again. I have a chart here. If you look at services inflation in this country, 3%. Core inflation, excluding housing, has been up since the beginning of the year. Is it possible that people got so locked into this idea that we were never going to have inflation again that they aren't paying attention to actual real-world economic data?
I think that's absolutely right. I mean, I think the really interesting story on inflation has actually been how extraordinarily stable it's been. I mean, broadly speaking, if you look at core inflation in the U.S. for 10, 15 years now, it's been very, very close to 2%, despite extraordinary economic shocks. And personally, I think that remains the case.
I want to get your impression of this sort of there's this view that inflation is the domain of the Fed, that ultimately the Fed controls inflation expectations, that they set a dial and they hit their 2% target, and if they said 4%, then it could go up to 4%, and everything's about them, that fiscal policy is just sort of a marginal actor. It feels like that's not the case, especially given the instant reaction to this election.
Yeah, I'm personally a very big skeptic of that framework and model. So I don't think there's a magical level of the real interest rate that the Fed sets that's going to bring the economy somewhere. Nor do I think inflation expectations. I think the role of inflation expectations, I think, is exaggerated, and their ability to control inflation is exaggerated, too.
And you can see on this chart right here, inflation expectations for the 10-year, for the 30-year have been climbing. For 30 years, it's now at 2.08%. For the 10-year, it's now at 1.9%. Eric, you were saying that the response that we've seen in the bond market is not a considered response. Do you think that this jump, this spike in inflation expectations is a considered response?
No. I think that is more likely indicative of the different simple risk properties of index-linked versus nominal bonds. So I would not read too much into that. I think this kind of price action is absolutely brutal. What you've got to recognize is there are people who own these assets for their insurance properties, for their safety properties. You think what 30-year treasuries have done since the post-Brexit low, we were down at close to 2%. You've had a double-digit sell-off, a double-digit capital loss in the long end of the U.S. yield curve. Even if you look today, last 2 days, what 30-year German government bonds have done, you're losing 5-6%. So I think what's going on is a much more fundamental reassessment of their risk properties.
But we're seeing this not just in the United States, but in other parts of the world as well. Does that kind of feed on each other? Even if it is a knee-jerk reaction, because you're seeing it in Germany, because you're seeing it in Japan, everyone gets the sense that maybe it's a little bit more real.
Absolutely. I mean, the global bond markets are correlated. And, as an investor, this is where you get the opportunities in being contrarian to these very dramatic moves. Because, again, if you think the whole story in the first quarter was about Japan all of a sudden going to negative interest rates, then we have the UK doing QE. And that's been totally inconsistent with what underlying global economic facts have been doing. And then, of course, now people have come up with, who was supposed to think this was going to happen.
So do people overstate the significance of these monetary policy innovations, negative interest rates, UK or the BOE or the ECB doing QE? Suddenly people think there's going to be some big regime change. Do you not buy the significance of these moves?
Well, I think they can matter, and they have been important. But what I would say is I would observe globally there's been a huge swing in the pendulum against those policies in the last 6 to 9 months. And that also changes the risk-reward properties of the bonds. If you think you've got, when 10-year yields are down at 1.3 post-Brexit, 30s are at 2%, and you think to yourself, well, what's the risk-reward? Are these global interest rates going to go more negative? That's what's changed, is there was no upside from further cuts, further QE, but now we're suddenly starting to realize there's scenarios where you lose a lot of money.
All right, Eric Lonergan, fund manager for M&G Energy Limited, thank you so much. Awesome to have you on set. Great to get your perspective, and it's perfect timing with what we're seeing here, so I really appreciate it.
Great to be with you both. Thanks for having me.
Coming up, Donald Trump goes to Washington. The president-elect sits down with the sitting president. We will bring you all the highlights. This is Bloomberg. I'm Scarlet Fu. What'd you miss? President Obama coming face-to-face with now President-elect Donald Trump today in a meeting that lasted for more than an hour and a half. Here's both men in the meeting.
I want to emphasize to you, Mr. President-elect, that we now are going to want to do everything we can to help you succeed, because if you succeed, then the country succeeds.
Bloomberg politics reporter Sahil Kapoor joins us now from our Washington bureau with more on this. And certainly the words were very gracious, the body language a little bit stiff. Sahil, what can you tell us about Trump's transition team? What do we know about it? Am I wrong in thinking that Chris Christie was heading it up?
Chris Christie was tasked with heading it up. As far as we know, there hasn't been an official change with that, although there have been some indications from the campaign that his role has diminished in the wake of the Bridgegate verdict that that ended up ensnaring two of his aides. We're getting some more information about his transition team, and that after he unveiled a website where he has a series of policy proposals that mostly matches what he talked about on the campaign trail, whether it's immigration, building a wall, and doing things like E-Verify and canceling President Obama's executive actions. On the issue of health care, he's talking about repealing the Affordable Care Act, also known as Obamacare, and offering some broad indications as to how he would replace it with things like high-risk pools. He suggested he would soften the pre-existing conditions guarantee and make it only for people who have continuous coverage. So there's a lot that's trickling out very slowly, and we're starting to get somewhat of a picture of what a Trump administration is going to look like based on that.
Sahil, it's pretty striking. Scarlett and I were just talking about how some of the characters in Trump's orbit here in this transition, I mean, they've really sort of like hit the jackpot in terms of reviving their fortunes. Chris Christie being one, Rudy Giuliani being another. These are Newt Gingrich. Also, I've read reports that he's in the mix for a possible post in the cabinet. People whose sort of significant role in public life it appeared had been diminished now might get pretty prominent positions.
That's very true. I mean, a lot of these people, like Jeff Sessions, a senator from Alabama, like Christie and Newt Gingrich, as you mentioned, who made a big bet on Trump early, are going to have that bet pay off enormously right now. A number of these people had been more or less airbrushed out of polite company in the Republican Party. They're not, especially in the case of Newt Gingrich and really even someone like Jeff Sessions, not always in the good graces of Republican leaders, not someone that you'd expect a Republican president-elect to tap to lead up the administration or at least play an advisory role in some of these big policies. But yes, you're absolutely right. These Republicans who made a big bet on Trump may have had no influence in a Republican administration if someone else had won, but now they will be kingmakers. They will be key players. Rudy Giuliani would be another one of them.
And the Game of Thrones continues. All right, Sahil Kapoor, thank you so much. Our Bloomberg politics reporter joining us from Washington.
Coming up, what you need to know for tomorrow's trading day. This is Bloomberg.
What'd you miss? The Dow Jones Industrial Average on a 4-day winning streak closing at a record high. Now, in terms of what's taking place already in China, there's lots of e-commerce purchases because it's Singles Day, November 11th. So don't miss this. Tomorrow, we're going to get numbers on Singles Day and how everyone did in China.
And don't miss this, University of Michigan sentiment tomorrow at 10 a.m. Eastern Time. I'm really interested in all the consumer surveys coming out. They didn't get affected much in the run-up. We'll see if they get hit in the aftermath.
We'll have Matt Bozer come on and explain it tomorrow. It's also Veterans Day tomorrow. The bond market will be closed after the big sell-off today, the continued sell-off. The stock market will be open.
The sell-off will stop briefly. That's all for What You Missed. Thanks for watching. We'll see you back here tomorrow.
Have a great evening. This is Bloomberg.
I'm John Heilman.
And I'm Mark Halpern. With all due respect to the media, remember, the next 4 years, best run as a marathon, not a sprint.
What a photo op this will be. Awkward.
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 Awkward. Feels like an understatement. We are watching Donald Trump's plane.
And there is Donald Trump's plane.
There's Donald Trump. We are watching the motorcade pull into the White House.
Donald Trump is now in the White House.
This meeting's been going on for a pretty lengthy amount of time.
This meeting now going on for close to an hour and a half.
Oh, to be a fly on the wall.
To be a fly on the wall. Wouldn't you like to be a fly on the wall? Fly on the wall.
Fly on the wall.
Even if we could interview said fly on said wall, fly wouldn't be able to talk.
On the show tonight, Donald Trump prepares to be president, and the nation prepares for President Trump. Some of the country is still shell-shocked by the surprise upset victory of the Republican. But today, the idea of Donald Trump in the White House got a whole lot more real. His visit with the current occupant of 1600 Pennsylvania Avenue today was as stunning as it was symbolic. The president-elect sat with Barack Obama for a 90-minute conversation that marked the first time these two had ever met face-to-face. And it comes after President Obama, of course, said repeatedly that Trump cannot be trusted with the nation's nuclear codes. Afterwards, the two political foes sat side by side for an extraordinary Oval Office photo op. Here is that strange and historic moment.
Well, I just had the opportunity to have an excellent conversation with President-elect Trump. It was wide-ranging. We talked about some of the organizational issues in setting up a White House. We talked about foreign policy. We talked about domestic policy. I want to emphasize to you, Mr. President-elect, that we now are going to want to do everything we can to help you succeed, because if you succeed, then the country succeeds.
We had never met each other. I have great respect. The meeting lasted for almost an hour and a half, and it could have, as far as I'm concerned, it could have gone on for a lot longer. We really, we discussed a lot of different situations, some wonderful and some difficulties. I very much look forward to dealing with the president in the future, including counsel. He explained some of the difficulties, some of the high-flying assets, and some of the really great things that have been achieved. So, Mr. President, it was a great honor being with you, and I look forward to being with you many, many more times in the future. Thank you, sir.
The First Lady of the United States, Michelle Obama, also met with the future First Lady, Melania Trump, and Vice President-elect Mike Pence, sitting down with Vice President Joe Biden. Late today, Trump was heading back to New York City. So, John, extraordinary moment. I'm wondering what you think of the Obama-Trump relationship right now.
Well, the first thing I have to say is, to be a fly on the wall at that meeting.
Or to interview the fly.
Yes, or to interview the fly.
That's a good get, the fly.
Either one. I thought, that obviously was the strangest thing. We were down there in Washington today. It's just, one of many strange things that have happened and surreal to watch, knowing the history of the two of them, knowing how much all the things that President Obama has said about Donald Trump, all the things that Donald Trump has said about Barack Obama. But I'm consistently impressed over the course of 8 years with the extent to which Barack Obama is genuinely committed to preserving democratic norms in this country. And his handling of this meeting, and I know we can talk about Trump's handling of it too, but just focusing on the president for now, his handling of the meeting was just, is a real testament to how much he cares about and takes seriously the notion that the transfer of power should not just be peaceful, but should be placid and should be smooth and should be, and I think he genuinely means it. A lot of things about Donald Trump he doesn't like, but he's now the president-elect, and he feels that everybody should be rooting for Donald Trump's success.
Hats off to President Obama. His statement yesterday and today was of the same spirit, and it's a requirement to the office, but he handled it in a way that was extraordinarily dignified and unifying. Donald Trump, as candidate, said, as president, I'm not going to do all this stuff that's a little bit out there. It's a different thing. That's just political combat. As president, I'm not going to tweet in a crazy way. I'm not going to, lash out. You wouldn't recognize Donald Trump if you covered the campaign the way he behaved today.
Yep.
And for those who are hoping that he's a different guy in the office, it's one data point, but he was low-key, dignified. He told, he praised the president's record, said he was going to ask the president for advice.
Yeah.
And in a campaign that has been extraordinarily abnormal throughout, what they said, how they acted, was like every other meeting like this we've seen in our careers over the television era as a transition begins.
Yeah. And look, it's the case that I think that one of the things that happens when you become president, and we hear about this in a particular context usually, which is the context of when you first start getting the real security briefing and how that changes you.
Like that, different. You're a different person.
You suddenly are like,
you're in the club,
right? You're like, okay, I said a lot of stuff on the campaign trail, but now I know what's actually going on, what the real threats are, what our agents in the field are confronting, and that changes you. I think going and sitting in that chair is another thing that changes you, not to the core of who you are, because Donald Trump is still Donald Trump, just as Barack Obama is still Barack Obama. But that is a moment where suddenly it's like, okay, the weight and gravity of what's happened comes and hits you full force.
Yeah. Again, if you just saw that photo op and you hadn't covered the campaign and you just said this is the Republican president-elect, this is a Democratic president, you'd say, oh, looks good.
Well, and it wouldn't have been that different from if Jeb Bush had been. If Jeb Bush was now the president-elect, the very similar kind of meeting would have taken place, similar tone, temper, everything else. All right. So after Trump left the White House today, he spent some time with two Republicans who, despite their complicated relationships with Trump over the past months, will be vitally important to setting and executing a legislative agenda next year. First on Trump's schedule was House Speaker Paul Ryan.
I think we're going to do some absolutely spectacular things for the American people. We look forward to starting. In fact, truthfully, we can't get started fast enough.
After that meeting, Ryan gave his visitors a tour of the Capitol, including the balcony on which Donald Trump will be sworn in January. And after a meeting later with Senate Majority Leader Mitch McConnell, Trump briefly told reporters, quote, "We're going to work very strongly on immigration, health care, and we're looking at jobs, big league jobs." Mark, apart from the fact that he obviously did not say big league and said big league, apart from that, what do you make of what you saw in terms of the optics and otherwise of the meetings up on Capitol Hill?
Well, the optics, I think, and the way the Hill leaders are bending to the reality of the president is a first among equals, co-equal branch, I think bodes well for breaking gridlock. It bodes well for preparing some of the relationships between particularly Ryan and Donald Trump. Big question for me is, they talk about tax reform, infrastructure, and immigration. Will this be a populist party or an establishment party? Because the agendas of the populist president-elect and the establishmentarian congressional leaders and the donor class of the Republican Party, it'll be fascinating to see. Wildly different. Fascinating to see. So I hate to use the phrase when the rubber meets the road. Yeah. But when they actually have to start writing legislation, it's going to be fascinating to see. But so far, just as a relationship with the president, the relationship with the Hill stuff seems good.
Just think about these two agenda items. You think about health care. On the basis of what we know about Donald Trump, he's a lot more liberal on health care than Paul Ryan or Mitch McConnell. And so they agree about repealing the Affordable Care Act, but there's got to be a replacement for it because they're not just going to strip health care insurance from millions of people. So what's the replacement? Paul Ryan's vision is very, very market-centric. And as you know, Donald Trump at one point was a backer of single payer. Yeah. So where do they meet on that question? Immigration, another question, obviously key. Trump has one of the places where he has the most clearly enunciated set of policies, but they are not the policies that Paul Ryan would implement on if he had his own way. So where are they going to end up? Those questions all very much to play for.
Just take health care, 1/7 of the American economy.
Right.
President-elect Trump started his closing stump speech saying we're getting rid of the Affordable Care Act.
Easy.
He also, as you said, he's for universal health care.
Yep.
So the health care sector wanted Hillary Clinton to win largely, even though they don't like the Affordable Care Act, because they wanted stability.
Right.
I don't know. There's a lot to figure out.
Yes.
A lot to figure out.
Yes.
All right. Even as President Obama calls for national unity and oversees a peaceful transition of power to Donald Trump, there are thousands of dejected and outraged Americans who are now protesting out in the streets the new president. Last night, there were massive demonstrations that erupted on the streets of at least 10 American cities, including Oakland, Chicago, L.A., and Boston, as protesters shut down highways, burned the president-elect in effigy, and chanted anti-Trump slogans. Here in Gotham City, thousands marched to Trump Tower to show their discontent with the nation's decision. Those demonstrations picked up again today in San Francisco and elsewhere in the country. We sent our team out to ask the protesters here in New York what they hope to achieve.
What are you hoping to come out of this rally?
Solidarity with others. Show everyone that in a democracy, we get our opinions count too.
I'm hoping with social media and everything we have at our fingertips these days, that things like this will make the world see that we do not want this president. This is not our president.
I'm hoping for people to see this, see that people are upset about his policies, about what he wants to do to this country, and will get up and join us.
Yesterday, devastated, angry, upset. Today we're coming together in an expression of rage.
I hope that he get impeached, to be honest.
We want people to organize, to pay attention to local elections, and to do everything they can in the next 4 years to stop the harm that's going to happen.
I don't know what else to do except for make my voice heard and get the voice out and make sure people know that this is not what we want.
Today, with the Democratic Party facing a lot of problems, Bloomberg Politics Read John is reporting that Howard Dean is now seriously considering a run to get back his former job as Democratic Party chairman. So, John, is this just kind of a falling action from a party that just suffered a surprising loss, or are we going to see protests continue and the DNC chair position is kind of a proxy fight, initial proxy fight for trying to find a new direction?
Well, I think that clearly that protests of this kind are not going to go on indefinitely. They will happen for a period of time, and as long as they're peaceful, no one wants to see anybody get hurt, but as long as they're peaceful, they're fine. You know, people should be allowed to march and express their discontent with what happened. I think that in a funny way, these protests portend more for the Democratic Party than they do for the Republican Party, because there is going to be a large core of the Democratic base that is not going to want to see an accommodationist Democratic Party, not going to want to see Democrats making deals with Donald Trump. They're going to want to see Donald Trump be a party of resistance. And for people who are elected Democrats and others in the party, they're going to have to contend with this. I think not for another couple of weeks. They're going to have to contend with this for at least the first year of Donald Trump's
There's this
administration.
issue of what to do about how to confront Donald Trump's agenda. There's also the issue of trying to rebuild the Democratic Party because, of course, as we've discussed, they've lost the White House, but they have been decimated in Congress and in the gubernatorial level, the state legislatures. When Howard Dean was chair, he was to the left. He called himself the Democratic wing of the Democratic Party. He's now to the right of Elizabeth Warren and Bernie Sanders. So as the Democratic Party chair, I'll just say one more thing. Arguably, if the right chair, if it's someone like a Haley Barbour or Ron Brown, it could be the most prominent spokesperson the party has. So the fight for that job is a big deal.
It is. All right, when we come back, we will talk to White House Press Secretary Josh Earnest about his visit to the Oval Office right after this. Welcome back. All eyes are on Washington, D.C. today as Team Trump begins its transition to 1600 Pennsylvania Avenue. And joining us now from the North Lawn at that very address, we have White House Press Secretary Josh Earnest. Josh, great to see you. Sorry we couldn't stop by and say hi when we were down there today.
I'm sorry I missed you.
You are actually the closest thing to a fly on the wall. Give us your readout of, I know you've done this for others, but give us your readout of the meeting.
Well, listen, the president described it as a positive, productive meeting. And the reason is that he heard from the president-elect in private what you guys all heard from the president-elect in public, which is that he struck a constructive tone and a tone that demonstrated his commitment to actually pursuing a constructive, effective, peaceful transition of power. This administration has actually been preparing for months for this transition of power. President Obama is committed to making sure that the next president can hit the ground running. I don't think he expected that he'd be working with the president-elect Trump's team, but that's who he's working with, and we're committed to making sure that that transition is effective in spite of the significant differences between the two men.
Josh, you said something today that surprised me. You were asked about President Obama's comments during the campaign about Donald Trump being unqualified, and rather than saying what I would expect you to say, the campaign's over, we're moving forward, you said, yeah, you said he still thinks that. Why
well, I don't want to leave people... Well, mostly because I don't want people to be left with the impression that somehow that was just empty rhetoric and that was a slogan and the president didn't really believe it. The president was making a forceful case based on his actual views during the campaign in support of Secretary Clinton, who is his preferred candidate. It didn't work out, and elections have consequences. You know, I know that shortly after he took office, President Obama was quoted rather derisively by a bunch of Republicans saying, I can't believe how arrogant and pompous he was to say that elections have consequences. Well, elections do have consequences, and I'm prepared to say it even when the election doesn't turn out the way that we hoped it would. Elections do have consequences, and the president's committed to ensuring a peaceful transition. That doesn't mean that he agrees with Donald Trump. It doesn't mean that all of the concerns that he raised no longer apply. Of course they do. But the time for the argument has passed. The American people have decided, and elections have consequences.
So, Josh, I'm going to ask you a question here just to kind of answer this as best you can in a human way, the kind of that grows out of Mark's question. We've had you get a lot of criticism in presidential campaigns, but what President Obama said about Donald Trump repeatedly was that he was just unsuited to be president of the United States, unfit to be given the nuclear codes, right? And now he's sitting across from him effectively saying, I'm going to have to hand you the nuclear codes. So in his mind, how does President Obama resolve that conundrum and feel okay with it? I understand he's committed to the peaceful transition of power. I get that he respects democratic norms, but what's he thinking in that moment?
He's thinking that he has a responsibility that every president does, which is to put aside his own personal, deeply held political views and put the interests of the country and our democracy first. The good news is he's not the first president who's been in the situation who's had to do that. In fact, the last two presidents have had to do that. President Clinton, after serving for 8 years, had to hand the keys to the Oval Office to then President-elect George W. Bush, who had basically run around the country promising to restore honor and integrity to the Oval Office. Not so implicit criticism of President Clinton, but yet President Clinton tried to fulfill his constitutional responsibilities. President George W. Bush did the same thing for President-elect Obama. President-elect Obama on the campaign trail was harshly critical of the previous administration, but that President Bush did not allow his personal pique or his disagreements with then President-elect Obama to affect his ability to preside over a very effective, successful transition. President Obama is committed to doing the same thing. And yes, that does require him to set aside his own personal views. But when it comes to the functioning of our democracy, even the President of the United States has to set aside his own personal views to ensure the success of our country.
Josh, in just a few weeks, you'll be signing a giant network TV political analyst contract, I assume. So let's audition right now. Why did Hillary Clinton lose?
Well, I think it's going to take a while to figure that out precisely.
Let's take your first blush at it, because you know when you're when you're a political analyst for a cable network, you don't have time to punt.
Yeah, this is very effective training, so I appreciate the opportunity to practice.
Josh Earnest, quickly.
There are a couple of confounding variables that I think are worthy of consideration. The first is Secretary Clinton won the popular vote, and it's important not to overlook that view, right? It's easy to say, well, she got beat really badly. She lost the electoral vote. I'm not calling into question the results of the election, but we would also be remiss if we didn't acknowledge that she got more votes than the other guy.
Sounds like you're going to be from the Lewandowski school and not the Axelrod school.
I'm not in my new job yet. I'm sticking to the old job. One job at a time, in the same way there's one president at a time. The second thing is there are millions of people all across the country who voted for Barack Obama in 2008, who voted for Barack Obama in 2012, and then voted for Donald Trump in 2016.
Why didn't they vote? Why didn't those people vote for Hillary Clinton?
I don't know. I don't know what the answer to that question is, particularly when you consider how aggressively President Obama weighed in, when you consider how popular President Obama is all across the country, not just with his longtime supporters, but with Republicans and independents as well, comparatively, given the polarized nature of our country. So look, there are a lot of questions to answer. There clearly are people across the country who are fed up with dysfunction in Washington, D.C. And as much as I believe that dysfunction should be laid at the feet of Republicans in Congress who refuse to do anything with Barack Obama, even when he was trying to promote ideas that they had originated, clearly there are a lot of people across the country who laid that dysfunction at the feet of Democrats, too, including the Democratic president.
Josh, you got... Sorry, didn't mean to cut you off.
No, so I think that's part of the answer too. Is what do we do to more effectively communicate with those voters who I think unfairly held Democrats in Washington, including Barack Obama, responsible for some of that dysfunction. I don't think they should have, but it does raise questions about what Democrats are doing to make a persuasive argument to those people who voted for Barack Obama twice and for some reason voted for Donald Trump.
Josh, that was pretty good. And when it comes to cable analysis, you're going to need to be like...
I got some work to do.
You're going to need to be a little. You're going to need to be a little bit pithier if you're going to make it on some of these networks because they don't give you a lot of time.
Talk to Axelrod. He's figured it out.
Josh Earnest, pleasure to see you. We'll see you down there again real soon. Thanks for coming on the show. Up next, we will take a quick editorial drive down the road to the Capitol building, where Donald Trump met with leaders on the Hill today. We'll be right back with that.
As we said earlier, Donald Trump went up to Capitol Hill after his meeting at the White House. Joining us now to talk about Trump and the Hill, NBC News' Kelly O'Donnell, who covers all of this. Kelly, just tell us about the sights and sounds of what happened and what was happening behind the scenes, as far as you know.
Well, it was really striking because I think Donald Trump has not a lot of experience with dealing with the sort of inner offices of Capitol Hill. I was here back during the campaign season when he was part of a big anti-Iran deal protest, and he got to go inside the Capitol. But today felt so different on so many levels. He carried himself in a way that seemed, by just my visual observation, a bit more restrained, a bit more sort of lower volume Trump, aware of the enormity of what he's involved in. He met off campus near the Capitol in a place where House Republicans tend to get together, first with Speaker Ryan and with Vice President-elect Mike Pence. And that was a chance to have lunch, continue a conversation that's been happening by telephone. Then it was Paul Ryan inviting Donald Trump and Melania Trump to see the view they will have on Inauguration Day from the Speaker's balcony. That's a pretty spectacular view by any standards in Washington, and that's a rare place to go. And without Donald Trump having any political experience, a place I'm sure he had never been before. So that was a bit more of the tourism side. And then he also had a meeting with Senate Majority Leader Mitch McConnell. And as he was walking out of that, I said, Mr. Trump, are you ready to be president? And he said, we're ready. And he gave me the double thumbs up, reminiscent of the campaign trail. And then he was also asked top priorities, and he mentioned immigration and jobs. And he spoke just for a couple of minutes. It was sort of the cacophony of a media day with the shutters going off, bouncing off the marble here in the Capitol. So hard to hear. Majority Leader McConnell then escorted Trump out and then came back and spoke to us for a moment. That's a rarity, too, saying it was a first-class meeting and they are eager to get going on the transition on areas where they agree. So for a Ryan and a McConnell, it's about trying to plan with a new Republican partner, and they have a whole lot more experience than he does.
So, Kelly, was there any discordant note? Did anything happen that even reading between the lines you'd say maybe there's some trouble here?
Not today. I think today was really about trying to project confidence, trying to be gracious. But in Washington, it won't take long for any of the disagreements or the trouble spots to filter out. But today seemed really on a kind of a grand tour sort of scale.
Okay, Kelly O'Donnell, NBC News, thank you. We're going to talk to a Democratic pollster about what happened on Election night. You're going to want to see this. Back in a moment.
There is an anti-Trump protest now underway on the streets of Philadelphia. You can see that right here on your screens. It's been less than 48 hours since Hillary Clinton's surprising electoral defeat that caused protests like this. And besides her concession speech yesterday, we have heard very, very little from the Democratic strategists involved in this race. about what happened and how things went so very, very wrong. Our next guest may be able to answer some of those questions. Jeffrey, with one F, Pollock, is a Democratic pollster and founding partner and president of the firm Global Strategy Group, which worked with the pro-Clinton super PAC Priorities USA this cycle. Jeff, you agree, like, polling has missed everything in a comprehensive way, right?
Yeah, there's no question on the presidential level, at least, that we missed a lot.
Yes. So let's start unpacking that. Let's first blush, why?
Well, I'm not sure I know the answer why. And frankly, I think there's a lot of people already speculating as to why, and my suspicions is that they are rushing to judgment. Some of the colleagues in the polling industry are already sort of almost making excuses. Well, it's all within the margin of error. Anybody who says that, I think, is fully kidding themselves. What we know is that in states, particularly where there was a high number of non-college white voters, the error in terms of predicting for Trump or Hillary was much higher. So the larger the number of non-college whites, larger error. So clearly we have missed something on the polling side in terms of looking at that kind of data, and I think we've got to figure out what it is. Why is it? Are they not talking to us? Are they not interested in doing surveys? Are they a group of voters that's so dissatisfied with the system that, in fact, even the phone call is a part of the system?
So obviously being wrong means that Hillary Clinton was shocked and disappointed more than she would have. But presumably if the data was wrong on Election Day, it was wrong a month ago. Right? So we go back a month ago. If they had a better model, they'd say, we're in more trouble in Pennsylvania and Wisconsin and Michigan than we thought. Right? That's the real implication of it being wrong, right?
It's possible, Mark. The one thing, obviously, the electorate does change over time. Who's interested and who's coming in and out of the electorate, who's going to vote. What we do know when you look at yesterday is Hillary Clinton will have gotten a couple of million votes, maybe 2.5 million votes fewer than Barack Obama. So again, we're having a lower turnout. Well, our models, all of our polling is predicated on looking at the past. And past behavior being repetitive, particularly in presidential elections, which it normally is. If it's off, we have a very hard time figuring out turnout.
Right, but so just to break down, you're saying part of the underperformance that was not picked up in the polls was with white working class voters, right? Are there other groups, as you've looked at the data, are there other groups that seem to have been where Hillary Clinton seemed to be doing better in the polling, but worse on Election Day?
The largest correlation seems to be that. Here's the truth. I'm not even sure about the exit polls right now. We're reporting on some of the exit polls as if they're religion, and yet I'm not sure, particularly the Hispanic number, for example, that many of us are already repeating. When you look at the precinct or county level data, I'm not sure that the reality is going to be that Donald Trump did better with Hispanics than Obama. I'm highly skeptical.
Than Romney.
I'm sorry, than Romney. Excuse me, than Romney.
Let me go to a particular group that's been bugging me for the last 2 days. White college-educated voters. We saw polling all year long, including some that we did here with highly reputable pollsters that said Hillary Clinton was going to be the first Democrat ever to win white college-educated voters. She was way ahead with white college-educated women and ahead with white college-educated men.
Right.
On the day, at least according to the exit polls, she won white college-educated women by a much narrower margin and lost white college-educated men. So what explains that?
There are multiple scenarios. Part of it, is it possible that there's this sort of shy Trump voter scenario that we've talked about? I think it's possible. I'm still not there yet. And again, I think we've got a lot of digging to do. The great part about data these days is take 6 months from now when the voter files are updated, we're going to be able to look back at people who said that they were going to vote for Hillary Clinton and look at those white college-educated voters and really see in these precincts what happened. The other thing is, I think we make broad assumptions. What's a white college-educated voter? Let's be clear. A white college-educated voter in Montgomery County, Pennsylvania, in the suburbs of Philadelphia, isn't the same as a white college-educated voter in Des Moines. And to sort of blanket say that they are is kind of silly. And so to some extent, I think we have to look. Hillary Clinton won Orange County, California, I believe the first Democrat to do that. That's that kind of white college-educated voter in one place, as opposed to Des Moines or any of the other places in the Midwest, even Pittsburgh.
I agree with you. One of the biggest problems in American journalism, political journalism, and politics is treating the exit poll like it's a tablet. It is done on the cheap now. It's just not great. So if Hillary Clinton called you up and said, Jeff, I need to figure out what happened, what kind of autopsy could you do on their data and on the public data to figure out what happened?
I'm sure that they did the best that they could do with the data that they had. I think that what I would want to do is to say, wait, take a pause, look at this stuff in a couple of months and let's really look deep, deep, deep. Like the modeling stuff that was done, some of it was very good in terms of looking and figuring out. We looked at early voters versus how they were modeled, and I think a lot of that stuff may have been very right. The question is predicting turnout, looking at turnout, differentials. Did we sort of miss something in that? And again, that's very hard.
Could you go back and look at their model and look at their data and say, whoa, given what we know happened, this was a mistake. This assumption was a mistake.
We all are going to be able to do that. There should be no doubt, which we couldn't used to, Mark. The exit poll was the only way we could do it. Now we actually have a tremendous amount more data to go back and make the call in a more real way. Let me give you one data point, right? The exit poll right now, and I think there's a lot of good to the exit poll. I won't go as far as you did. But the exit poll right now predicts that 52% of the electorate nationwide was female, which is the traditional number. I would not be surprised a year from now when we look back at the voter files if it's not 51 and if it's more like, if it's 51 meaning, and the smaller the number of females in the electorate, the more likely it is Mitt Romney, Donald Trump would win. So that's the kind of stuff I think we can look at.
So all these things are totally fascinating, and I'm fascinated by them. But here's another question that just is a dumb question someone would ask. In 2012, one of the most impressive things about the Obama operation was their degree to which, a few days before Election Day, they sat down privately with people and said, here's how we're going to perform in the battleground states. And in almost every state, within very, very small amounts, they were precisely correct. And data's tough, complicated then.
Yes.
It's tough and complicated now. How could they be so on the money and have this operation, these people, the Clinton campaign, be so far off when a lot of them are the same people?
Yeah, again, I don't know because I'm not in the campaign. They're going to talk a lot, I'm sure, about what they saw. That is a place, though, where error does make a difference, where 1 or 2% difference. There's a great article today about what a 2% difference could mean. So I do think error has something to do with it. I also think that things do break at the end of the day. We're going to find that multiple things came into play, but a shift in sort of who independents were voting for and who they were passionate about, that seems to be a very overwhelming thing in some of the numbers I've seen.
All right. Jeffrey Pollack with 1F. That was super helpful and open at the beginning of what's going to be a much longer conversation for a lot of Democrats and other people who are interested in this topic. Tavis Smiley joins us right after this quick break.
Updating from earlier, we told you about a scoop by our colleague Reed John concerning Howard Dean, who's leaning towards a bid for DNC chairman. Well, Dean just tweeted on the topic. He says, quote, the Dems need organization and focus on the young, need a 50-state strategy, and tech rehab. I am in for chairman again. Joining us now from Los Angeles to talk more about the aftermath of Tuesday's stunning election, the host of PBS's The Tavis Smiley Show, the eponymous Tavis Smiley. Tavis, how do you think Howard Dean is DNC chair? You want to endorse him for that right here, right now?
I don't endorse people, but he can't do much worse. I like Howard Dean. He's a great guy. Democrats need help. And one thing I do respect about Howard Dean is that he has said consistently, to his credit, that Democrats need a 50-state strategy. And clearly what we're seeing this time around is that whatever strategy they thought they had for all 50 states didn't quite work. So if he advances or engages this notion of his 50-state strategy, then again, I think Democrats can't do much worse than they did this time around.
So, Tavis, you're a Democrat. You're not a doctrinaire Democrat, but you're a Democrat, right?
I've never said that publicly, but I certainly did not vote for Donald Trump.
Yeah. So when you made the point that the Democratic Party did pretty poorly, what do you think Democrats have to do now in the face of a Washington that's dominated not just by Donald Trump at the White House, but by Senate majorities and the Senate majority of Republicans, House majority, full Washington controlled by Republicans right now?
Number one, Democrats need to accept the fact that Donald Trump is our president. These protests I'm heartened by because on Tuesday, racism and sexism and classism and militarism won as surely as Donald Trump did. So I'm heartened by these protests in the streets for people who don't want to accept that particular narrative for what we want this country to become, number one. Number two, Democrats need to accept the fact that they've got to stop trying to triangulate. They've got to stop being so centrist. They have to accept the fact that if they can move a little to the left, as I think was seen in this campaign, by moving a little to the left, John, they can pick up the kind of energy, the kind of enthusiasm and excitement that might have made the difference this time around. And for my white liberal friends, let me just say this. I went to a restaurant today to grab a quick salad for lunch before I came to see you all this afternoon. And I had a waitress come to me who I've seen and known for years, a white woman, just in tears. And I can't begin to tell you the number of phone calls from friends and others I've received over the last 48 hours from my white liberal friends who feel this is a catastrophe. Let me just say respectfully that black folk deal with disaster every day. We deal with catastrophe every day. And some of my white liberal elite friends are so used to winning that you lose one election and you feel like the world is closing in on you. I'm upset, too. Let me be clear about that. But misery must never have the last word, number one. And for my white liberal friends who are asking me how they explain this to their kids, that's not a real problem. A problem is explaining to your kids why there's no food in the refrigerator, why you can't pay the rent, why you're being evicted once again. That's a real problem. And so I'm upset, too, but we got to contextualize this thing, John, I think, in the right way.
Tavis, why did Hillary Clinton lose?
There are as many answers to that question as there are people in this country. I believe that the Democrats ran an elitist candidate in a populist election. I think that in part explains it, number one. Number two, you can't take voters for granted. And number three, I think that they relied on this sort of Hail Mary from Barack Obama to suggest to black people that if they didn't vote for Hillary in the waning days, that he would take that as a personal insult. Well, I was insulted by the president making that suggestion, making that remark, as if black folk don't have agency to vote the way they want to vote, even though many of us voted for Hillary Clinton. But I can't also imagine how these 53% of white women who voted for Donald Trump, never mind his misogyny, never mind his patriarchy, can you imagine, Mark or John, that white women at that level would ever even consider voting for a black man, Barack Obama or anybody else, who had talked about grabbing them down there and tonguing them down after eating some Tic Tacs? There's no way that 53% of white women would ever consider voting for a black man. Here again, racism, sexism, and elitism on display once again.
So, Tavis, you have a prescription for the Democratic Party that you just offered. You said that the other part, another important piece is to acknowledge that Donald Trump is going to be the president, right? So in terms of trying to contain what Democrats see as the potential damage from a Trump presidency, what's the strategy there? How do you go about dealing with Donald Trump in the Oval Office?
The short answer is the Democrats have to get back to representing its base. The Democratic Party in so many ways has abandoned its base of working class, everyday people. When you take care of those people, John, they will take care of you. The bottom line is clear, that Hillary's base in so many ways didn't show up in the way that it should have, or they thought it would in certain places. And I just believe you take care of people, they will take care of you. The politics, I suspect, will take care of themselves. And I'm not in a position to offer Democrats in Congress a way to deal with this. I will say this. There are some fights that ain't worth fighting even if you win. But there are other fights you have to fight even if you lose. And so Democrats are going to have to stand on their principle. I was reminded by my friend Tom Friedman just a day or so ago that you can actually dance. I love this from Friedman. You can dance in a hurricane if you stand in the eye. What's the point? You have to stand in your truth. And even with a hurricane swirling around you, if you stand in your truth, you can make some progress.
Tavis, you said that you're glad to see the protests. Would you like to see those continue throughout the Trump administration?
I think Donald Trump's got to be held accountable. It's just fascinating for me how, again, some of my friends who didn't want me to hold Obama accountable 8 years ago are now bum rushing for me and others to hold Donald Trump accountable. Trust me, I'm going to do that, just like I did with Barack Obama, respectfully. But at the end of the day, he's got to be held accountable. You can't run a campaign with the kind of racist, sexist, classist language that Donald Trump used, and then overnight just magically say, and now we must unite. Now we must all come together. There's no apology, Mark. There's no atonement. But now we're just supposed to magically sing Kumbaya, hold hands, and all is well. I don't believe that. I accept his presidency. I look forward to him, I hope, being a better president than I'm believing that he can be, but he must be held accountable all the way through by Democrats and, for that matter, by all the rest of our fellow citizens.
Tavis Smythe, thank you very much. Appreciate you joining us. Next, two of the best explain the whole thing to us in our stirring conclusion of this episode. Dan Balls and Andrea Mitchell right after this. And if you're watching us in Washington, D.C., you can now listen to us on the radio at Bloomberg 99.1 FM. We will be right back.
We're joined now by two of the greats. Chief correspondent for the Washington Post, our friend Dan Balls, who comes to us from the Post newsroom in Washington, D.C., and NBC correspondent and MSNBC anchor, the amazing, spectacular, world historical Andrea Mitchell.
Such hype.
Yeah, so we're hyping.
Underhype.
You guys are underhyped. You're also wearing matching outfits today, so you guys are like a rhapsody in blue up here on the wall. Thank you for being here. Andrea, tell me what, in having covered Washington in a lot of transitions of power, and with all your wisdom, what did you see today with Mr. Trump's first day really in Washington, D.C.?
Well, I saw something that obviously encouraged the markets. It encouraged me as a citizen. The fact that President Obama was as gracious and forthcoming, as he clearly was, in wanting a longer meeting, a more substantive meeting, that Donald Trump responded in kind. I was anchoring live when that tape was played back from the Oval Office, and it was extraordinary. It was a lesson in democracy. It was Donald Trump saying it could have gone longer, and I hope I have your counsel, and I am honored and honored to be with you. And President Obama saying that they discussed foreign and domestic issues. I don't doubt that President Obama took the opportunity to give Donald Trump a personal presidential daily briefing, the likes of which he has not had. He had 2 intelligence briefings, but they were of the bare bones sort and not what he now gets as the president-elect. And just as I was thinking earlier, just as Harry Truman did not know until he actually was president that there was an atomic bomb, there's a lot that Donald Trump is probably learning in the last 48 hours about covert operations and other foreign engagements that we can only imagine, and other burdens that any president of the United States has every day when he receives that briefing from the intelligence communities.
Dan, there's a million stories now that all of us are trying to figure out and game at. I'm wondering not what you know, but what are you wondering about now about the next couple weeks up through January 20th?
Well, I'm wondering what I think all of you are wondering, and that is, who's going to surround Donald Trump once he goes into the White House? I mean, first of all, what's that White House staff going to be like? What kind of a mix is it? Is it Republican insiders? Is it some outsiders? What kind of flavor does that give to the Trump presidency? I'm curious about the relationships that he's going to develop on Capitol Hill. I mean, what we're seeing in these days immediately after the election are some predictable and obviously encouraging to a lot of people exchanges of pleasantries and commitments to try to make this transition as smooth as possible. But we know that this is a deeply divided country. We see that from the protests in the streets, and we saw that throughout the campaign with the Trump constituency. And so there is a lot bubbling beneath the surface that these first few meetings don't even begin to get at. And I think that's the question that I'm most interested in the next few weeks, how that begins to sort itself out.
Andrea, you covered the Clinton campaign really carefully over the course of this last year and a half. Hillary Clinton gave her speech yesterday, but there has been more or less, other than that, silence from her people, from her friends. What is going on in that world right now beyond grief?
A lot of grief, a lot of tears. At that concession speech, the eyes were not only filled with tears, but they were rimmed in red. People had been weeping all night because they were so confident. They were absolutely sure they were going to win. And, everyone got it wrong. We got it wrong. Every pollster got it wrong. The conventional wisdom, other than you guys and Mark saying on Morning Joe and on your own program that he had a path and laying it out as virtually no one else did. So kudos to you. But the headline writers, we saw how the New York Times and other newspapers had made their headlines of Madam Secretary and had not even figured out the alternative headlines that they were going to post. I think they're trying to figure out the rest of their lives. The nation has taken a very different turn than what most people expected. For these people, it was personal. Many of them had been with Hillary Clinton for 30 years throughout all of her public policy. Huma Abedin, who was obviously involved in that firestorm at the end and earlier as well, had been a college intern when she first took her job with Hillary Clinton as First Lady. And the kids, the ones whom I really feel for, is the press wranglers and the others who flew around on the planes with us, who had such stars in their eyes and such aspirations and really were in it for reasons of idealism and hope and change. Yeah. The change that they wanted. So I really feel for them. A woman posted an extraordinary picture on Facebook of walking in the woods near Chappaqua, near White Plains, and running into Hillary and Bill Clinton with their dogs and posing for a picture. And there was Hillary Clinton, in leggings and walking shoes and no makeup, with the dog, smiling broadly. She is extraordinarily strong, and I thought that concession speech was really profoundly moving.
Yeah. Okay, wish we had more time to talk to both of you, but we're out of time. So thank you both. Dan Balls at Washington Post, Andrea Mitchell of NBC, and we'll be right back. Our talented colleagues Josh Green and Sasha Eisenberg have another incredible Business Week story about how Trump's data team made its Election Day predictions. You can read that story right now on BloombergPolitics.com. Coming up on Bloomberg Technology, the great Disney CEO Bob Iger, my former boss, talks to David Weston, also my former boss.
You know who we should say goodbye to right now? Alexander Trowbridge.
Alexander Trowbridge, an esteemed member of our team, headed off somewhere else. He will be missed and successful. Thanks for watching. John and I will be back here tomorrow, same bad time, same bad channel. Sayonara.